Carla with First Team Real Estate, and when buying a home, one of the most essential steps in the process is obtaining title. This legal concept confirms that you have received ownership rights for the property from the seller. But what happens if there are legal or financial problems with the sale? Your new home could cost you more than the purchase price in unforeseen complications. No one wants that. So that's where title insurance comes in, and if you're shopping for a home, it's a must-have. So today I'm interviewing Mark Van Waring from Ticor Title to discuss how title insurance works and what makes it so important. Hi Mark, thanks so much for being here.
Thank you, Carla. Nice to see everyone, and thanks for having me here.
So what is title insurance and how is it different than other forms of insurance?
Probably the easiest way to explain it, where most people are similar or familiar with other forms of insurance, auto insurance, medical. These are typically things that are paid on a monthly or an annual basis. Title insurance is a one-time thing that comes into play when property is sold and loans are made. But simply put, the purpose of title insurance is to protect a buyer in the future for anything that should arise from the past. So let's say, for example, seller's selling a property, a new buyer comes in and buys it, and 6 months, 2 years later, somebody comes out of the woodwork and said, I was owed $30,000 on this old loan. These are the purposes for title insurance, and through our exhaustive searching, we look to catch all these things, but in the event there was a mistake made, the insured, which is our buyer, has the ability to file a claim, and the title company takes the risk for anything missed. But basically, we're trying to give the buyer a clean slate to the ownership so that there's no loans, liens, taxes, encumbrances against the property.
So basically nothing that's going to be outstanding, and kind of protect the new buyer from crazy people coming out to get them.
Yeah, and if you think about it, for most people, the purchase of the home is one of the largest investments they make, and to have a one-time insurance, to have the protection that you're getting what you bought, the person that sold it to you had the ability and full ownership to do so, and they're not going to have anything in the past that, to come back and attack the property.
Got it. Okay, makes sense. And why is title insurance needed then? You kind of went over that a little bit.
We went over it a little bit, but essentially, again, given the purchase prices these days, people want title insurance, but it's primarily dictated by lenders. What you'll find is on any transaction with a loan, a lender will not make any type of loan without insurance on their money. Now, it's a little different for a lender because what they're looking to do is secure the interest against their property. Meaning that if they're going to make a mortgage or a loan to the buyer, they want to make sure they're the senior loan, or what we call in first position, so that in the rare event a borrower is not able to make payments and something were to happen and the lender had to take the property back, they want full encumbrance against the property in the event they had to do that. And that's the purpose of insuring the lender.
And how long does title insurance usually last?
Good question. So again, kind of unlike the other forms of insurance, the title insurance lasts or protects the buyer for as long as they own the property. Somebody buys a property, they own for 2 years, 20 years, 100 years, as long as the insured, who's what we call the buyer at the time, as long as they keep ownership to the property, that title policy protects them, the buyer, for as long as they own it. And similarity with the lender, we protect the lender for as long as the loan is still open with the borrower.
Interesting. And from my understanding, there's a difference between an owner's title policy and a lender's title policy. Can you explain that a little bit?
Yeah, sure. So again, going back to the example where most transactions we see on the residential side involve a loan. So the title companies at the close of escrow issue 2 policies. One is called an owner's policy that protects the buyer for as long as they own the property, but then we also have a lender's policy that protects the lender. They're calculated slightly different. The owner's policy is based on the acquisition price of the home, and the lender's policy is based on the loan amount. So those can differ depending on the structure of the deal.
Interesting. And who pays for the lender's policy and who pays for the owner's policy?
Generally what we see on residential in Southern California, I think it varies in other states, but typically speaking, the seller pays for what's called the owner's policy, which you might think sounds a little backwards. Why is the seller paying for the title insurance to protect the buyer? But I can guarantee you on almost maybe all the people listening, if they've looked at the closing statement when they bought their house, the same thing took place. So it's customary that the seller pays for the owner's policy, and then the buyer, who has the ability to either get financing or take out a loan, the buyer pays for the lender's portion of the title insurance. And if it's a cash purchase, there's obviously not a lender's policy. So in that instance, there'd only be one, which is called the owner's policy.
Got it. And then, for example, on $1 million property, what would these fees be?
Well, on the owner's policy, as title companies, we have to file our fees with we're regulated by the Department of Insurance, in this case, California. So we have what we call a schedule of fees. I have a little rate book here I could tell you in a second if you want me to pull it out, but ballpark on $1 million home, the owner's title policy would probably be around $2,300.
Okay.
And then the lender's policy would actually vary based on the loan amount. For example, if they were putting 20% down and it was $800,000, it would be X. As the liability or the loan amount goes down, the fees go down. But interesting, so we have this kind of schedule of fees, if you will, but on the owner's policy, to give you an example, for every $10,000 in increase, so the difference between the title fee on $990,000 versus $1 million is about $15. So it's about $15 per each $10,000 increment.
Okay, interesting. So good thing it's just a one-time payment then, because that could add up over the years.
Yeah, and if you think about it, really the assurance and what it provides, there's pretty good value there that you can sleep at night knowing that you're protected, right? And there are times where mistakes are made, and that's the purpose of the title company. And I'm fortunate enough working at Ticor Title as part of one of the largest ones, and we're regulated to keep millions and millions of dollars in the bank in case that situations arise where we have to pay out a claim.
So it definitely gives people peace of mind. And the most common question I get from home buyers, especially first-time ones, is what are the different ways to hold title?
Yeah, this is more of a longer one, but as a buyer, during the process, and you're working with the escrow, one of the common questions they're going to ask is, how do you want to take title, or how do you want to hold title? And sometimes for first-time home buyers, they're unsure what the different options are. We have a really cool, we call a vesting chart that shows all the different ways to hold them and what they mean. But generally speaking, if it's an individual, you can hold title by yourself. But as you start getting with more people on title, there's different forms. So probably the most common one we see on residential with individuals, with his husband and wife or family, it's what's called joint tenants. And joint tenants essentially means it implies equal ownership. So if you have two people, it implies each has a 50% interest. But the reason people like it is there is built-in right of survivorship. So in the event somebody were to pass away, when you're on title as a joint tenant, the interest of the decedent would automatically pass to the other person by simply filing an affidavit. Another form that we see is what's called tenants in common. Similar to joint tenants, however, some distinctions. One is you don't have to be equal owners. So sometimes we see this with friends and not family, but you could structure it to where one person owns 80% and one person owns 20% and vice versa. The downside with tenants in common, if one party were to pass away, that interest does not go to the other person. And you could end up in court doing what's called a probate, where the courts essentially decide whose interest or who takes over that interest. So all of them have, I don't want to say pluses and minuses, but different variations, and that's why it's important to talk to Carla and your escrow professionals, and I'm sure she could share our vesting chart. And then lastly, we do deals where people purchase in a trust. That's a way to hold title. An LLC, a corporation, a partnership. So there's a host of things out there, I think, that can suit most people's needs.
Yes, and I'm happy to share the vesting chart with you guys too. And why does the title company need a copy of a trust when a property is being sold that was inherited from parents or family?
Okay, good. That's a good question as well. That's something we get a lot. What we're seeing a lot these days are properties have been in families a long time, right? And let's use an example of grandma and grandpa bought a house for $200,000 in the 1970s, and 10 years later they put it into a trust and they lived a long, great life, and they passed away. And now the heirs are wanting to sell the property. A trust is not a public document. A deed into a trust and a deed out of a trust is. So anytime in real estate where a property is being sold, where the owner, it's in a trust, and the creators, which we call the trustees of the trust, if somebody passes away, becomes incapacitated, or resigns, the title company needs to see the whole trust. And basically we're looking for a couple things. One, who has the authority to act on behalf of the trust now that grandma and grandpa are gone? That person is called a successor trustee. We're also looking to see who the beneficiaries are. The beneficiaries are the people that are going to get something out of the trust. A lot of times those are the same people, but we're basically looking inside the trust. If there's 3 kids, perhaps the parents said, we want the oldest to be the successor trustee, or they might say, we want all 3 to act together as co-successor trustees. And then we're looking to see where the property goes, right? Because what if inside the trust, it says Carla gets the house. Upon our death, if the house goes to Carla, but she's not the successor trustee, we have to look in there because we don't want to close a deal where the kids run off with the property, but it was supposed to, or the kids are running off with the proceeds selling the property, but it was supposed to go to Carla. So in that particular case, we would allow the successor trustees to sell the property, but we might require an acknowledgement from you that you're aware that the property is being sold. So it's more of kind of a trust and verify. We're not going to record the document, but again, my company is going on the hook for the full value of the sale, so we just have to check those things.
Awesome. And what processes do the title companies perform during a purchase or a sale?
Okay, yeah, a lot of times as a buyer and a seller, you're probably interfacing more so with your agent in the escrow. However, there's quite a few functions that the title company does at the beginning, during, and after a transaction. So for example, somebody like Carla, who we've worked together for a long time, a lot of times she'll reach out to me before the property goes to sale. Mark, what do you see? Are there any red flags? What are we going to deal with? But once we get into escrow, we are running what's called a preliminary title report. It's a full search of the property as to ownership, taxes, loans. We could also pick up things like child support, judgment, IRS liens, and we're also going to show things like easements. What if there's a shared driveway and so forth? So we run this report, which is really the roadmap of the transaction at the beginning, and then escrow and the lender use that. But to fast forward at the end of the transaction, which some people might not know, is in an example where somebody's getting a loan, the buyer's lender is going to send all the money to the title company. So the title company is going to receive the money. The escrow company is going to be ordering what's called demands to pay off any loans or liens the seller has. So we receive the money, we record the documents, we make all the payoffs to kind of clean the title. We then send all the money back to escrow so they can balance it out, and then ultimately we hold the title insurance going forward. So it's a lot of stuff behind the scenes where we're working directly with paying off taxes, lenders, the county recorder, and so it's a lot of behind the scenes stuff, but it's significant. There's a lot of spokes to a transaction that a buyer or seller, might not be aware of.
Right. This is all really good information. I'm learning a lot from this talk. And then last question is, can you give me an example of an interesting or crazy scenario that you've come across in title insurance?
Oh man, I've seen a lot of them.
I'm sure you've seen a lot of kooky people.
Yeah, the majority of deals we do are fairly straightforward, right? They're clean, husband and wife, one owner, there's nothing. However, as a title company doing this all day long and been in the business long enough, we've seen, off the top of my head, I saw an example one time where the caretaker was deeded a property 3 days before somebody passed away. And the caretaker was trying to sell the property, and it turned out that the person that passed away actually had 3 kids who knew nothing about this. So it was almost kind of like a deathbed deed. That's one example. We see some issues with powers of attorneys where it contradicts what, let's say mom and dad became incapacitated and they have a trust, but then somebody shows up with a durable power of attorney trying to sell the property that contradicts what's in the trust. Let's see here. I had an interesting conversation this morning. I had a buyer call me who trying to purchase a property, and he's going through a divorce. And he wants to purchase the property, and I explained to this person that you're either divorced or you're married. It's complicated, we're separated, that doesn't work. So in this particular case, to acquire property while you're still married, it requires the soon-to-be ex-wife to execute, what we call an interspousal deed, or we have to get an exception from the lender. But one of my favorites, I don't know how many years ago this was, there was a transaction where a seller had a home equity line of credit on their house. And that's essentially a credit card, right? You can borrow against your house. And as we're going through the process, we get down to the end, the seller decided it was a good idea to go out and buy a Mercedes-Benz the night before closing and didn't tell anybody. Wow. So we get the demand to pay off the home equity line, which was like 12,000 bucks, and nobody told anyone. And then post-close, the creditor, the lender goes, hey, what's this $75,000 purchase? And the seller thought it was okay and didn't think they needed to pay it back because the title company didn't catch it. So I thought that was pretty fun.
Wow, crazy.
So just a few off the top of my head, but it's real fascinating on our side of the business. We're more behind the scenes working with Carla, lenders and escrows, but it's fascinating, and you see, again, residential, commercial, investors. We've seen different markets, and I like what I do.
It seems like you're very passionate about it. Well, thanks so much for being here and for your time. Hopefully that was helpful to you guys. And please reach out to both of us if you guys have any questions about title insurance. Thanks so much. See you in the next video.